A very good afternoon to all of you. Uh, I am CA Mandar Dela. I am Honorary Secretary of Bombay Chartered Accountants Society, and I welcome you all to this very unique. I would say something which is created by the students for the students. Students volunteer and very nicely planned session is there today with us on GSTR-9 9C, where our students leader are going to take us through some of the nuances of the GSTR-9. We all know that GST is very uh, popular topic for the day. It's a flavor of the day, and many students are interested in getting into the GST practice as well as to know about the GST compliances. So GSTR-9 9C keeps on changing every year, and there are always new things the government brings up. So it is extremely necessary for us to know what are these changes. Otherwise, the way in which you will fill the form of GST, if you fill it in an incorrect manner, then there is a possibility that some or the other queries will be raised to the client. Nowadays, there is an AI which is happening. So I have with me uh, Riya, who is going to present the session for the day. And also have with me the Ashwin sir. Ashwin sir, I welcome you, both of you, on for this particular session. And without wasting too much of a time, let me ask Riya to take this particular session forward. But before that, I would request Ashwin ji to give his opening remark, and then probably we can start with the session. Are there any other introduction sessions, Raj, that we are supposed to do?
Yeah, Anjali will introduce the speaker and the mentor.
Okay, so let first introduction take place, then probably thereafter Ashwin will give the opening remarks, and then probably thereafter we can start with the presentation. Thank you.
It's my pleasure to welcome you all at BCS Next Learning and Development Bootcamp today, focusing highly on importance topic of GST annual return and reconciliation. At BCS, we have been committed to continuous learning and development for our members. Today's bootcamp is a direct reflection of the same commitment. Now it's time for a small introduction for our speakers. So, first I would like to introduce our mentor of the event, CA Ashwin Chotalia. He is a partner in firm in Mehta and Shokshi for more than 10 years in the experience of indirect field, contributing GST related limited reviews for corporate to ensure effective compliance and mitigate litigation risk. Today's student leader is our Riya Shah. Riya Shah is currently pursuing third year of BCom in HR college. Riya is currently undergoing her articleship from Mehta and Chokshi LLP. I would like to invite Riya to take over the session.
Thank you so much, Anjali, for the introduction. Today, me, along with the guidance of my mentor, CA Ashwin sir, would be presenting in front of you all on the topic of GSTR-9 annual return and the reconciliation statement 9C.
So just hello everyone, I am Ashwin Chotalia. So just to brief you everyone that GSTR-9 every year it is getting changed. Some or the other changes are coming up, and because of that everything boils down to the discrepancies in the way of notices from various departments, maybe it's center, state. Everybody is issuing notice in their own fashion, on their own fashion. So we'll be dealing with the GSTR-9 and 9C, where what columns, how many tables, how many chapters, how many taxes are to be uh, filed in particular column. If not reported correctly, what would be the issues? So we will be dealing with each and every types, and how what may be the best practice. I may not say that it is the fine, it is going to be the actual final practice that everybody should follow, but from our point of view, this would be the best practice that should be followed to avoid the notices and the correct reporting of GSTR 990. So Riya would take over the session for and wherever required, I'll pitch in for any clarification if required.
So let's begin with the topic. So we would be discussing on the introduction and applicability of GSTR-9 and 9C, the recent changes and amendments along with some of the interesting case studies and the consequences of late filing of GSTR-9 and 9C. So first, let us run through the basic topics. Let us brush the concepts. So first of all, what exactly is the annual return? It is a statement of return which is required to be filed annually by every registered person, except a few categories of person, which we will see in the further slide. It contains the summarized annual details of outward supply, that is our taxable supplies, non-taxable supplies, RCM, etc., plus the input tax credits which we have claimed during the year, the taxes paid, and the refund claimed in the financial year. It also includes the transactions pertaining to the said financial year, in respect of which the amendments or the changes have been given effect to in the next financial year. That is, all the necessary adjustments and amendments are required to be reported in the annual return. Now, who is liable to file the annual return? So, according to section 44, every registered person other than those few categories of person are required to file their annual return. Now, who are those few categories of person? A taxpayer who has registered himself under the composition scheme. He has to file return under GSTR-4. Therefore, he is not required to file 9(9)(c). Then casual taxable person, input service distributor. He is just responsible for transferring the credit and not for the filing of 9. Then non-resident taxable person, person paying TDS under section 51 of CGST and person collecting TCS under section 52 of CGST. However, for this, the government every year issues a notification whereby it states what is the turnover criteria to be met for the filing of GSTR-9. So for the financial year 24-25, if the aggregate turnover of rupees 2 crore is exceeded, then the person is required to file GSTR-9. And for 9C, the aggregate turnover limit is rupees 5 crore. However, a person can voluntarily opt for the filing of 9 and 9C even if the turnover criteria is not met. Now, how do we calculate aggregate turnover? So, aggregate turnover includes all the taxable supplies, excluding the inward supply, that is our RCM, plus the exempt supplies, our exports, and the interstate supplies. Now, in case of interstate supplies, if the registration is done on the same PAN, suppose for Maharashtra and Gujarat. Now, the turnover of Maharashtra is suppose 100 CR, but the turnover of Gujarat is 1 lakh. Then over here, both the turnover of both the states will be included and not just one state. So, we need to check the total of all the registrations. Then it excludes the taxes paid, that is our CG, SG, IG and UT GST and cess. It also excludes our RCM, that is our inward supplies liable under reverse charge. Broadly, there are 3 categories of annual returns: GSTR-9(9)(c), GSTR-4 and GSTR-9(b). GSTR-9(9)(c) is filed by a regular taxpayer who files GSTR-1 and 3(b). GSTR-4 is filed by a composition scheme dealer, that is a person who is registered under composition scheme. And GSTR-9B is filed by an e-commerce operator who has filed GSTR-8 during the year. Now, as we all are aware, the due date for filing of annual return is 31st December following the end of such financial year. So, for the financial year 24-25, the due date is 31st December 2025. However, a registered person, if he has skipped filing of GSTR-9(9)(c), he can file the same within 3 years from the due date mentioned above. So, if we take the example of financial year 22-23, suppose the due date was 31st December 23, then he can file it within 3 years. So, 3 years over and above 2023, that comes to 31st December 2026. However, this is subject to the applicable late fees and the penalties. Now, what is the consequences of late filing? What are the late fees applicable? So, if the aggregate turnover is up to 5 CR, then the late fees is rupees 50 per day or 0.02% of the turnover, whichever is lower. If the aggregate turnover exceeds 5 CR up to 20 CR, then the late fees is rupees 100 per day or 0.04% of the turnover, whichever is lower. And if the aggregate turnover exceeds 20 CR, then the late fees is rupees 200 per day or 0.5% of the turnover, whichever is lower. Now let us understand about the tables of GSTR-9, how it is bifurcated and why is it important to report in the separate tables. What is the benefit out of it? So once we see all the tables in detail, then we will understand what, the importance of reporting it in this way. So part 1 is table 1 to table 3, wherein we report the basic details, which includes financial year, GSTN number, and the legal and trade name. Part 2 includes the details of outward supplies. So table 4 is the details of taxable supplies plus our RCM. And table 5 includes the supplies on which the tax is not paid. That is our exempt supply, non-GST supply, non-taxable supply, nil-rated supply, etc. Part 3 includes table 6 to table 8. That is our details of ITC. That is what all ITC we have availed during the year, the reversal of ITC, the ineligible ITC, and the reconciliation with GSTR 2A and 2B. Now part 4 includes table 9. That is our details of tax payable and the tax which is actually paid under all the heads. Part 5 is table 10 to table 14. That is transaction for the financial year declared in the returns of the next financial year. That is basically our adjustments or amendments made after the year end. That is up to the specified period 30th November. Part 6 is table 15 to table 19. Table 15 is basically the details of demands, refunds, which are claimed during the year. Table 16 is the supplies from composition dealer or the goods sent on approval basis. Table 17 is the HSN-wise summary of outward supplies and table 18 is the HSN-wise summary of inward supplies. Table 19 deals with the late filing fees, if any, required to be paid.
So here what we have tried to capture is to give you the overall picture of summary of GSTR-9 and how it has been bifurcated between inward supply, outward supply, what taxes you have paid, what is the HSN-wise summary, and when you are filing late that particular GSTR-9 9C, then the late fee is where it is to be reported. So here the table number and part number is very much important because wherever we discuss further, we will be discussing with the point of view of the table number and that subpart, because everywhere the reconciliation will come into picture that if you add up this much, then this will be the sum, this will be the total, and it will have its own impact at somewhere else. So we will be dealing with the table number. So it is important that we get this table number right. Yeah, we can proceed.
Now let us understand table 4 in detail. So table 4 is basically the details of advances, inward and outward supplies made during the year. So it is basically our taxable supply plus our RCM. Now in table 4A, we report our B2C supplies. That is the supplies which are made to the unregistered persons. Now over here, the amount which is reported will be the net of figure. That is the net of debit notes, credit notes and the amendments. In table 4B, we report the B2B supplies, that is the supplies made to registered persons. Now, in case of zero-rated supplies, there are two bifurcations. One is the export-oriented supply and one is the supplies to SEZs. Now, over here also, both these are further bifurcated into with payment of tax and without payment of tax. So, if the person has opted for with payment of tax, then that will be reported in table 5. And if the person has opted for without payment of tax, that is our LUT, then it will come in table 5, which we will see in the next slide. So over here, table 4C reports the exports with payment of tax and table 4D reports the supplies to SEZs with payment of tax. In table 4E, we report the supplies in the nature of deemed exports, like export-oriented units. In table 4F, we report the advances on which tax has been paid, but the invoice has not been issued in the current year. So they will be issued in the subsequent years. So for example, in case of services, the time of supply is the date of receipt or the date of service, whichever is earlier. So if we take the example of builders, now over here, usually the advance is paid before the registration is made. And the GST is also paid in this case, in case of under construction properties. So we need to report that in table 4F. But when the registration has been made, we report it in table 4A or 4B as applicable. So basically, the unadjusted advances are reported in table 4F, and once they are adjusted, we report it in 4A or 4B. Table 4G is the aggregate value of inward supplies on which are taxes paid on reverse charge. That is, it includes both the registered plus the unregistered. So over here, we can assume the case of a lawyer. So usually the lawyers and advocates are unregistered. So over here, the tax is paid on the reverse charge basis. In table 4G1, the supplies on which e-commerce operator is required to pay tax. So over here, if we take the example of Zomato or Swiggy, so the liability to pay tax is on Zomato and Swiggy. So they are required to report in 4G1. So over here, the e-commerce operator is required to report. Table 4H is the subtotal of all the above tables, that is table 4A to table 4G1.
So here the total table, we can summarize the table 4 as the total liability which is to be paid, or it something which is that a registered person will be paying on their own pocket, either by utilizing the ITC or by cash if they do not have sufficient ITC, except table number 4G, which is where the RCM is to be paid, and that this is the exception of this particular table 4, wherein the RCM liability is coming into picture, and this is not an outward supply. So otherwise, everything is outward supply, and the total liability that particular taxable person is to be paid, is required to be paid, that will come over here. Do we have any questions so far here? No questions. Okay, okay, we can proceed.
Moving ahead, so table 4I and 4J is the reporting of credit notes and debit notes with respect to table 4B to table 4E. Now over here 4A is not included because we have already reported the net of figure in table 4A, that is our B2C supply. In table 4K and 4L, we report the amendments with respect to these tables. Now 4M is the subtotal of table 4I to 4L. In table 4N, we report the total turnover on which tax is payable. That is our 4H plus the credit notes, debit notes, and the amendments. Now let us understand table 5, that is our details of outward supplies on which tax is not payable. That is basically our supplies on which tax is not levied. So table 5A is the reporting of zero rated supplies, that is our export without payment of tax. Table 5E is the aggregate value of supplies to SEZs without payment of tax. We saw that with payment of tax is reported in table 4. In table 5C, we report the supplies on which tax is paid by the recipient on RCM basis. In table 5C1, it is the supplies in which e-commerce operator has paid tax. But over here, the supplier is required to report. Now, just as we took the case of Zomato and Swiggy, so over here, the restaurant is, suppose the restaurant is registered, then the restaurant is required to report over here. Then table 5D, 5E, and 5F. It deals with the exempted, nil rated, and non-GST supplies. So more or less, if we see, then 5D and 5E, that is our exempted and nil rated supply, have the same implications. So the person has an option to report table 5E along with table 5D, or he can also report it separately. And he has to report non-GST supplies in table 5F. One more thing to note is that non-GST supply is not included in the calculation of aggregate turnover of 2CM. Table 5G is the subtotal of table 5A to table 5F. Table 5H and 5I are the aggregate value of credit notes and debit notes with respect to table 5A to table 5F. 5J and 5K are the upward or downward amendments with respect to these tables. Over here, table 5H to table 5K are the optional tables, and we can directly report the figures net of in table 5A to 5G. 5L is the total of debit notes, credit notes, and the amendments, that is 5H to 5K. In table 5M, it is the turnover on which tax is not paid. That is basically our table 5G plus the table 5L, along with the amendments, debit notes, credit notes. Table 5N is the total turnover on which tax is payable plus not payable, except RCM and e-commerce. So it is table 4N, that is our taxable supply, plus table 5M, the one in which tax is not paid, minus our RCM, that is 4G table, minus 4G1, that is e-commerce. So over here, the turnover which is reported is purely the one in which the liability is the person who is reporting. The liability which goes on someone other's hands is not reported over here.
Outward supply. Basically.
Yeah, basically our outward supply. Let us move to table 6. That is our details of ITC availed during the financial year.
6 and 7 both deals with the input
Yeah.
tax credit.
So table 6A is our total ITC availed in table 4A of GSTR-3B. These are the auto-populated figures which come from the return of GSTR-3B. Now this includes the ITC which is of the current year plus of the previous year which is availed in the current year. Now table 6A1 is a new table which is introduced in the current year, which is purely the ITC of preceding year which is availed in the current year, other than the ITC reclaimed as per Rule 37 and 37A. So now what is 37? So Rule 37 is basically our 180-day reversal. So suppose the invoice has been issued, but the payment is not made within 180 days. Then as per GST law, we are all are aware that we need to reverse the ITC along with the interest. So that is our reversal as per Rule 37. 37A is basically the non-filing case. So suppose the person has not filed his return. So in that case, we need to reverse the ITC claim. But over here, we have an option to not reverse the interest. We can reverse only the ITC.
So here in 37, it is the case of 180 days wherein the payment is not made to the supplier, then ITC is to be reversed. Okay, and this 6A is the claim amount, claim table and not the reversal amount. So whenever there was a reversal earlier and you are claiming it now, then it is to be reported. It will not form part of 6A1. So rule I'm explaining basically rule 37. 37 deals with the reversal of the ITC because of non-payment to vendors within 180 days. And 37A is the rule wherein ideally what happens that if something is appearing in 2B, we claim it in GSTR 3B, right? But there is a possibility that the person is filing GSTR-1 and that is why it will flow to your GSTR-2B. Okay, but he will not file their GSTR-3B. So in that case, how you will come to know where you will reverse? So that is why the government has came up with the rule that you cross that particular year and up to 30th September, if something is not filed, that particular GSTR-3B is not filed, then you will have to pay it. You will have to reverse it, but interest is not need to be reversed. So here, if you have reclaimed it, and if you have what we can say, if you have repaid that that particular person, taxpayer, supplier has filed their GSTR-3B, then you can reclaim it. Then reclaim will form part of year 37A. So that will be the reclaim. So here 6A1, that will be the case that here whatever we will be reporting, that will be everything that you are reclaiming it, but it is pertaining to previous year, not current year. That is, in our discussion, the current period is 24-25. Okay, so if anything which was pertaining to 22-23 or 23-24 or prior to that period, if that claim you are claiming for the first time in GSTR-3B of 24-25, then it will come over here. Other than 180 days reversal, whatever may be the reclaim, that will be here. Okay. Then we have 6A.
Moving further, 6.
Yeah.
6A1 is a temporary reversal.
No. 6. This is not, see, table number, entirely table number 6 is never a reversal. It is always a claim. Reversal, we have a separate table that is 7. Oh, TV card. For reversal, we have a separate table that is table number 7. Here everything will be claimed. Whatever we will be reporting, that will be claimed, either of the current year or of the previous year. Are we clear?
Then table 6A2 is the net ITC that is purely for the current financial year. That is excluding the ITC which we have claimed of the previous year in the current year. So this is claimed in the current year plus availed also in the current year. Now our table 6B is all other ITC, basically our regular or normal ITC, what we call, excluding the imports and RCM. But however, this includes the services received from SEZs and the ITC which we have claimed on it. We will see further why this is included. Table 6C is the ITC availed on inward supplies received from unregistered person. So basically 6C and 6D is our RCM, ITC on the RCM. 6C is for the unregistered persons and 6D is for the registered persons. Table 6E is the ITC availed on import of goods, including supplies from SEZs. And table 6F is the ITC availed on import of services, excluding supplies from SEZs. We have excluded it from here since the services from SEZs are already included in table 6B. Table 6G is the ITC received from input service distributor. Now over here in table 6B, 6C and 6D, there are three categories for bifurcating the ITC claimed. So it is inputs, capital goods and input services. So over here, the registered person can either report it separately under the three heads, or he can also report the input services in the columns of input. So input services row is not mandatory. He can report it under inputs and the remaining ITC under capital goods. So if I summarize this up, then 6A is our total ITC that is auto-populated from 3B. 6A1 is our preceding year's ITC availed in the current year. 6A2 is our net ITC for the current year. 6B is our all other normal ITC. 6C and 6D is our ITC on RCM. 6E is our import of goods. 6F is our import of services. And 6G is our input service distributor. Moving further, 6H is our ITC which is reclaimed. We will understand the table 6H in the further slides along with some case study. Table 6I is our subtotal, that is 6B to 6H, that is our ITC which we have claimed plus the ITC which we have reclaimed. Table 6J is the difference between table 6I minus 6A2, that is our net ITC for the financial year. Table 6K and 6L is the ITC availed through form Tran 1 and Tran 2. So this is basically our ITC before the new regime, that is our VAT or service tax. This is that, but practically in today's time, this table is not filled. It is not practically applicable. In table 6M, we report the ITC availed through ITC 01, 02 and 02A. That is ITC on the inputs held as stock in trade, or the transfer of ITC in case of transfer of business or merger, demerger, amalgamation. Table 6N is the total of table 6K to 6M, and table 6O is the total ITC that we have availed, 6I plus 6N. Any doubts?
Yeah.
Can you please summarize the difference between 6A1 and 6H?
Yeah. So 6A1 will always be the ITC. Say, for example, you are in a particular, if you are following circular 170, I think many of the people will be aware of circular 170. In that case, if the goods are not received within that particular time limit, then what you do is first you claim, then you reverse it. Okay. And then you again claim it. Okay. So when you again claim it, you will report over here at 6A1. Because 6A1 is the reclaim of the particular item very first time. Or the very first time when you claim it, it will come as 6A1. Okay. And rule 37 and 37A, if that is the case, then it will come at 6H. That we have some case studies that we will discuss it further. Okay.
Moving further, table 7, that is our ITC reversal and the ineligible ITC. So table 7A is the reversal as per our rule 37, that is 180-day reversal. Table 7A1 is the reversal as per Rule 37A. That is our non-filing case in case of GSTR-3B is not filed. 7A2 is the reversal as per Rule 38. That is our banking companies. Table 7A1 and 7A2 is again a new table which has been introduced in the current year.
Okay, so
Now, table 7B is the reversal as per Rule 39. That is for input service distributor. Table 7C and 7D is Rule 40 to 43. That is our proportionate reversal of common credit. So, table 7C is for other than capital goods and table 7D is for the capital goods. Now, over here, suppose the invoice contains the value of both taxable supply and non-taxable supply. So, we can claim ITC proportionately only for the portion of taxable supply. And hence, we need to reverse the portion of non-taxable supply ITC. Table 7E is our block credit, that is our permanent reversal. Table 7F and 7G is our Tran 1 and Tran 2 reversal, that is the old GST provisions. Again, these are not practically very much used. Table 7H is our other reversals. Earlier, table 7A to 7E were not mandatory and we could directly report it under 7H. But from now, all these tables are mandatory. Table 7I is our total ITC reverse, that is table 7A to 7H, the sum total of all these tables. Table 7J is our net ITC available for utilization, that is 6O, that is our ITC availed during the year minus the ITC reversed during the year. So 6O minus 7I.
so here the table 7 is basically we can say everything is reversal. What you have, whatever you have claimed in that particular year, that is 24-25, whatever claim you have made in GSTR 3B, that comes in table 6, and whatever reversal that you have made will come in table 7. But in reversal in GSTR 3B, practically you have only two columns, that is permanent reversal and temporary reversal. Okay, but all those reversal need to be bifurcated in all these different tables wherever it is relevant, and whether it is pertaining to 180 days reversal, temporary reversal, block credit, is it pertaining to exempted supply, then Rule 42, capital goods, then Rule 43. If you have ISD, multi-state presence, and then you have ISD, then if there is reversal on account of ISD, then there is a separate reversal required for ISD as well. There will be other cases also wherein there will be reversal. Say for example, there is a reversal on account of the way we discussed earlier, that there is a delay in receipt of goods. So first you have claimed in table 6 whenever it is appearing in 2B, but the goods have not reached to you. That is why you cannot claim it. So you will reverse it, that particular ITC. So where you will reverse it? So it will come under 7H, that is other reversal. The same way, there can be multiple possibilities that the ITC which was claimed in earlier year, and that was then you had a notice, and you have a, whenever there is a notice, you have a option to pay it either through DRC 03, and if you do not want to go through DRC 03, then you also have an option that you reverse in 3B or 3B. Then in 7H, you can mention it as this is the reversal. In 7H, you can add multiple 7H1, 7H2, 7H3. Practically, our advice would be that you mention it different way, 7H1, 7H2, 7H3, so that whenever you face the notices, you present it to the officer by way of GSTR-9 copy, that this particular reversal is for this reason, this reversal is for this reason. So that should be the bifurcation, so that it is easy to face the proceedings of the department. Yeah, and one more important table is the auto-computed table that will be coming as a 7J. That will be total of ITC that you have claimed in 6, table number 6, and the reversal that you have made in 7. So 7J, this particular table will directly flow to GSTR-9C as well. So that is why this is important. Yeah, we can move on further. Any questions so far in table 7? Yeah, there is one question from Prerna, that is there reclaim ITC included in table 6? Yeah, reclaim ITC will be included in table 6, but the tile number, that is the row, will be different. In table 6, reclaim will depend either if it is pertaining to previous period and not pertaining to 37A, then it will come under 6H. Otherwise, it will come under 6A1. Otherwise, it will come under 6H.
Now let us understand table 8, that is our other ITC related information. So table 8A is basically our ITC as per 2B. That is our ITC wherein the invoice date is 24-25. That is our financial year 24-25 current year invoices. Then 8B is our ITC as per 6B. That is our all other ITC which we saw. Now over here earlier 6H was also included. That is our reclaimed ITC. But in this year 6H is not included. So this is an amendment. Then in table 8C, it is ITC on inward supplies other than imports and RCM received during current year but availed in next financial year. But one thing to note in 8C is that only first time claim is to be reported over here. If we reclaim or there is a subsequent reclaim, then we cannot report in this table.
Otherwise, it will have a difference, and that difference will lead to notices. So it is better that we go by the guidelines and FAQs given by the department, that we should report only the first time claim, whatever we claim in next year, that is in 25-26 in 8C and not other ITC.
Table 8D is our difference between 8A and 8B 8C. Then table 8E is our ITC available but not availed. And table 8F is our ITC available but ineligible ITC. Table 8G is our IGST paid on import of goods, including supplies from SEZs. Table 8H is our IGST credit availed on the import of goods in the financial year. That is basically it is the amount as per 6E. Table 8H1 is the IGST credit availed on import of goods in the next financial year. Again, this is a new table. So if, for example, I say that I had paid IGST of say rupees 100, out of that 80 was claimed in the current year and 20 is claimed in the next year, then 100 will be reported in 8G, 80 will be reported in 8H, that is our 6E, and 20 will be reported in 8H1. The difference is our 8I, which should be ideally 0. 8J is ITC available but not availed on import of goods, which is equal to our 8I. And 8K is the total ITC lapsed. So that is our 80 not availed ITC, ineligible ITC 8F plus 8J in case any ITC is lapsed.
There is one question from Prerna that there is some ITC seen in 2B in the month of April 24, but not seen in 8A. What to do in such ITC? How do I reconcile with the ITC in 3B and 8A? See, there is a difference between 2A or 2B and 8A. 8A will have the ITC of the current period only and not pertaining to the previous period. Okay, so there is always going to be the difference between 8A and 2B. Okay, and 8A will have the ITC only for the current period, which is pertaining to 24-25. In 3B, you might have claimed the ITC of previous year, as it is appearing in April 24 for the first time in 2B. But that is the case of 23-24 and not current period. If that is the case, then you have already eliminated that particular ITC at 6A1, which is the new column which is introduced in the current period, in current year's filing, 24-25. So it is already eliminated there. So it is not again going to come into the picture at 8A1, at 8A.
Moving further, let us understand the remaining tables. So table 9 is basically our details of tax paid that we have declared in the returns filed during the entire financial year. Then table 10 is our upward amendments, that is the amendments made through debit notes or the invoices when we want to increase the amount of invoice. Table 11 is our downward amendments, that is made through credit notes. Table 12 is the ITC of financial year reversed in the next financial year. Table 13 is the ITC of financial year availed in the next financial year. Now, one thing is in 8C, we used to report only the first time. Now in table 13, we can report first time as well as the reclaim figure. That is our subsequent reclaim. Both these things are included in table 13. Then we get the total turnover, that is as per 5n plus 10 minus 11, that is our amendments. Table 14 is the differential tax paid on account of the amendments, that is table 10 and 11. In case any tax is to be payable, then we can report it over here. Table 15 is the demand and refund which we have claimed during the year. This is an optional table, not mandatory to be reported. Table 16 is the information on supplies received from composition taxpayers and demand supply by job worker and goods sent on approval basis. So suppose if the normal taxpayer has been converted into composition taxpayer, then all that is reported in table 16. Again, not a mandatory table. Table 17 is HSN-wise summary of outward supplies. Table 18 is the HSN-wise summary of inward supplies. Table 18 is an optional table. Table 17 is a mandatory table. Table 19 is the late fees payable and paid if the filing is made late.
So here I'll comment on each and every table that in GSTR-9, there is a table number 9. This is the total summarized liability table that is pertaining to current period. Okay. Once, if you recall table number 4, whatever may be the liability of your current period, that will be the total of table number 4. And table number 4 will come directly to table number 9 as tax payable. But say for example, something which you have missed while reporting during your normal course of GSTR 3B and 1, and you have also not amended that particular invoices or not reported that B2C supply, taxable supplies by the time of the amendment time limit, which is 30th November. If that is also gone and in December, you are sitting in December and some new entries come, and you identify, say for example, there is also a reconciliation part, that there will be other income part, and on which you are, as an auditor, as a tax practitioner and as a professional, you identify new tax liabilities. So where will you report it? So directly go to table number 4, you amend those particular 4A, 4B, 4C, wherever it is actually pertain, and directly come to table number 9. Tax payable column is not a freeze column. Tax payable, you can change it. So you can amend that tax payable column in table number 9, and accordingly the differential amount, whatever paid in 3B, differential amount, you can discharge it through GSTR through DRC 03. So this will be the reporting of table number 9. Tax paid is coming directly from GSTR 3B, but payable figure you can change it, and they have kept it amendable and not freezed, because there will be chances that there are certain plus or minuses that there will be that is to be reported in GSTR 9, because this annual return is finally the sum and substance of whatever activity you have done in 24-25. So this is the annual summarized return that we are filing. In table number 10, yeah, this is additions of sales. Table 11 is subtractions of the sales, that is that you have done in 25-26 till 30th November. Then 12 and 13, yes, this is reversal pertaining to the ITC. 12 and 13 deal with the input tax credit. Whatever input tax credit that you have claimed in this current particular period, that is 24-25, if something was claimed inadvertently or not required to be claimed and you have claimed it, reverse it in next period, that is by table number 12. And if there is something need to be claimed, then it should be reported in table number 13. So my practical advice would be here, don't report anything as net off, claim minus reversal. If you report it that way under table 13 or table 12, it will lead to notices, and it will, whenever you face the notices, it will be difficult task before you to explain it to the officer. So advice would be report separately table number 12 and 13 differently. Yeah, there is a question.
Yes. In table 13,
Hmm.
we can report both the ITCs. The ITC which has been availed in next year
Yes.
and ITC which has been reclaimed in next year.
Yes.
Both are,
Yes.
both can be reported.
So one more important point to discuss over here is that 8C also we report ITC which is claimed in next year, and table 13 also we report 8C whatever ITC claimed in next year. But the important differentiation between that is that 8C will have only the ITC which is on the forward charge and which is claimed for the first time. It is possible that you have claimed the ITC just because it is appearing in 2B in 24-25. But you have reversed it because the goods is not received or the service is not availed, or maybe some other reason that the invoice is not yet reached to the accounts team. So that can be the reason that the ITC which is appearing to be I have claimed as per circular 170 and again I have reversed it. And you again reclaim it in next year. But 8C will not have that impact. Table 13 will have that impact. Same way, there are possibility that certain ITC which will be appearing in 8A. Okay. But it will, and that is why it is to be reported in 8C. But table 13 will have other ITCs, which is say for example pertaining to RCM, import of goods, import of services, or some other ITCs, which you are claiming for the first time. Then it will come over here. The same way, if there is a reclaim of ITC for as per rule 37 and 37A, then also it will come over here at table number 13. We have different examples yeah, there we have a case studies further in this presentation. There are a few questions, just a minute. Which is the correct comparison for reconciliation for 2B versus 3B books or 8A versus 3B versus books, as few GST officers comparing 8A instead of 2B. See, ultimately, the correct comparison is not what is 2B versus 3B or 2B versus 8A. It is whatever the claim, whether it is appearing somewhere in the particular, whether it is in 2B or 8A, that should be demonstrated. It is not, see, every table, every working, whatever is available on GST portal is important. But how to present it and what is the logical reason to compare, that should be demonstrated. There is no right and wrong to comparison. If you compare 2B with books or 2B with 3B, then obviously there is going to, it will lead the difference of 8A, because 8A will have different picture. 8A will not have the ITC which is pertaining to previous year. So that is why it is important that you find out those differences, find out those transactions and demonstrate that this bunch ITC was already available in the previous year. And that is why claimed in the GSTR-9 of this year. So this is the answer for that particular reason. What is the amendment in table 10, since it shows amendment with effect from 20 to 9/25? I could not get this question. Can I report in table 12 if I have claimed the ITC, if I have claimed wrong or extra? Yes, you can reverse it in next year and report in table 12. How is effect of reversal reflecting in table 7 getting affected in 8D? See, earlier there was an issue with the 8B reporting, because whatever you earlier it was 6B plus 6H. So always there was a claim, and that is why it will lead to the difference in 8D, that wherever you have a reclaim, then also it is appearing as extra claim. And with regard to reversal, which is already there in table 7, yes, there is going to be the difference, but that you have to demonstrate by of 7. In table 7, there is a different column for different type of reversal. So you can present it that way, that this particular ITC is already reversed. So that is why this is the reason of difference in 8D. Then one more question, that what is the difference between the amount of 4L, amendment of 4L and table 10? 4L, where it is? Yes, this 4L is the amendment that you are doing for the within the same period, and table 10 will have the amendment that you are doing in the next year pertaining to current period. So that is the difference. Yeah. Okay, so we have discussed till table number 13, and thereafter in GSTR-9, when you see the form, there is a total turnover. So this particular turnover will go to your GSTR-9C, that 4N plus 10 minus 11. Okay, then 14 is the 10 and 11 difference. Then important here is the table number 17, wherein there is a mandatory reporting of HSN wise outward summary. Here there is a restriction on the number of decimals to which you have to round off. You cannot say that I will round off to 100 and report the liability. You will have to round it off to nearest 2 digit, 2 decimal, and then you can upload it. Otherwise, it will not. It is the form will show the error and you will not be able to file it. Then in 9, table number 19, the late fees payable will be calculated. If the return is late, then GSTR 9C का जो भी late fees है, whatever may be the late fees of pertaining to GSTR 9 will come at table number 19. Late fees of GSTR 3B is already captured at table number 9 of GSTR 9. So it is not again going to be over here, and table number 19 is auto-populated. Okay, so till the date of filing, whatever may be the late fees, it will appear over here, and without paying this, you will not be able to file GSTR 9. So yeah, we can proceed.
So we will first look into 9C. We also have some case studies for 9. But before we get into that, we will first quickly run through 9C and then come back to the case studies. So 9C is categorized into 5 parts. So part 1 is table number 1 to table 4. That is our basic details, financial year, GSTN number, legal and trade name, and if liable to audit under any act. Part 2 is reconciliation of our turnover, that is table 5 to table 8. That is reconciliation of gross turnover and taxable turnover. Compare it with the audited financials. And if there are any differences, then we can report the reasons for the same. Part 3 is our table 9 to table 11. That is our reconciliation of rate-wise liability, the tax which is to be payable and the tax which is actually paid. The reconciliation of that. Then part 4 is table 12 to table 16. That is reconciliation of our net ITC, the differences due to the same and its bifurcation. And if any tax is payable on the same, then we can pay through DRC 03. Part 5 is our table 17. That is if any late fees is required to be paid if the filing is made late. Table 17 is our new table which is introduced in the current year. Now let us understand table number 5, that is our reconciliation of gross turnover. In table 5A, we report the turnover as per our audited financials for the state. Now one thing to note is in the audited financials, we have the total turnover which includes the turnover of all the states. But for the GST purpose, we need to determine the turnover for each state and report it in this table. Then table 5B is our unbilled revenue at the beginning of financial year. So take an example that suppose the invoice is of previous year, but it has been billed in current year. So GST is paid in the current year. So it will appear in the GSTR-9 of the current year. But in the financials, it would have been reported in the previous year. So hence we need to add it back in the turnover of the current year financials. Now 5C is the unadjusted advances at the end of financial year. Now again the same, suppose the advances are of next year received in the current year. GST is paid on the same and hence it reflects in the GSTR-9 of the current year. But in the financials, it would have been gone as a liability or shown as advance. So we need to add that back to the turnover. Table 5D is our deemed supply under Schedule 1. So for example, if any gift has been given to employee exceeding rupees 50,000. So we all know that it is considered as a supply under GST, but not as per accounting purpose. So we need to add that back. Then table 5E is our credit notes issued after the end of financial year, but reflected in the annual return. Table 5F is our trade discount as per the audited financials, but which are not permissible under GST, and hence we need to add that back. Table 5H and 5I is the opposite effect of table 5B and 5C, that is our unbilled revenue and the unadjusted advances. Table 5J is the credit notes as per the audited financials which are not permissible under GST. Basically, our financial perspective adjustment this is. Table 5K is the adjustments on account of supply of goods by SEZ to DTA units. Table 5L is the turnover for the period under composition scheme. In table 5M, we report the adjustments in turnover made as per section 15 and the rules. That is basically our valuation rules. In table 5N, it is the adjustments as per the foreign exchange fluctuations. Since foreign exchange fluctuations is not permitted under GST, like it is just a financial adjustments, but we report the same in audited financials. So we need to report it over here and make the necessary adjustment. Table 5O is our other adjustments. Now these can be multiple adjustments which are not covered in the above rows. We can also report all other adjustments like table 5B to 5N can be reported in table 5O. So 5B to 5N are the optional tables and not mandatory. Then we arrive at 5P, that is the annual turnover as per our financials after making the necessary adjustments. And we compare it with the turnover declared in our annual return. Now, what is this turnover declared in our annual return? It is our taxable supply plus the non-taxable supply, excluding our RCM and e-commerce reporting, plus the necessary amendments, that is our table 10 and 11 of 9, GSTR-9. Now in 5R, we get the unreconciled turnover. So ideally this should be 0, but if it is not 0, then there can be multiple reasons for the same and we must report it in table 6. We can add the rows and report various reasons.
Okay, so let's come to table 5A. So here it is important to note that if there is a multi-state or multi-registration company, then in that particular case, turnover of that particular state is to be reported at 5A and not the turnover as per the financial statement, which might be the consolidated turnover reported in the financial statement. So this 5A amount, that is turnover as per financials, are to be derived by the management, that this is the turnover for this particular state or this particular registration. Some state might have two registrations or 3 registration as per their requirement or as per the business requirement or need. Okay, so important is that the turnover should be the turnover of that particular registration and not the consolidated entire pan-India turnover. Okay, and these are the different reasons which will definitely lead to the difference between the turnover as per financials and turnover what is reported in GSTR-9. So from 5B to 5O, there can be multiple reasons which might have led to the difference between the turnover as per financials and turnover as per the GSTR-9 what we have reported. Yeah.
Moving further, now let us understand table 7, that is the reconciliation of taxable turnover. So in table 7A, we have the annual turnover after adjustments that we got from table 5P in the previous one. Now over here, this includes our non-taxable turnover also. So hence we need to subtract all those things from 7A. That is our exempted supply, nil rated, non-GST, no supply, 0 rated supply, supplies on which tax is paid on reverse charge, and the e-commerce operator supply. So everything has to be subtracted. That is our table 7B to 7D1. Again, 71 is a new table which has been introduced in this year. Then we arrive at table 7E, that is our taxable turnover after the adjustments. Now, as per GSTR-9, we have table 4N minus our 4G, that is RCM, minus 4G1, that is our supply of e-commerce operator, plus minus the necessary amendments which we have reported. And if any unreconciled difference is there, that will be reflected in 7G, and we will report the reasons for the same in table 8. Any questions?
So table 5 will have whatever we are reporting in table 5 or GSTR-9, we have to report it over here as well in 7B to 7F, wherever tax is not paid. Yeah.
Now table 9 is basically our rate-wise liability reconciliation and the amount payable for the same. So in table A to table K, we have our percentage-wise outward tax and RCM, which we need to report it percentage. Then in table K1, we have other liabilities. In table K2, we have supplies on which e-commerce operator is required to pay tax. Then we have interest, late fee, penalty, and others. And we have the total amount which is to be paid. We compare it with the total amount payable, and if any unreconciled payment of amount is there, or we need to pay the same, then we can report the reasons and pay it. That is our table 10, reasons for the unreconciled payment of amount.
Ideally, what will happen that if everything is whatever is there in GSTR 3B and 1, if you have paid, everything will flow down to GSTR 9 at table number 9. And if you have paid that, then in table number 9 of GSTR 9C will have its bifurcation and will lead to zero in difference between the payment that is to be made or unreconciliation. Otherwise, there will be chances that there is a difference between this. Earlier, which I gave an example that there are some items on which you could not identify during the period to which the amendments were allowed. That is why you need to report in GSTR 9. If you report in GSTR 9 and in table number 9 tax payable, if you add that particular amount, then again the difference of unreconciled amount will be zero. But if you do not add that back amount over there, then it will lead to the difference in 9R. And that is why you will report that as table 10 as reason for payment. And through DRC 03, you will report it.
What's table? You see, we have already reported.
There can be other reasons. There can be other reasons where you will be reporting the liability. This is the miscellaneous, because while preparing or while drafting this GSTR 9C, they might thought that there can be other reasons as well that you need to pay liability. So whatever interest, late fees, penalty they have derived. That reversal of excess ITC can be done through DRC 03, and that is
during their while GSTR 3B. Will it be?
See, if you note it, that table 9 of GSTR 9C is only to report the outward liability and not liability pertaining to RCM. If there is a liability because of and not pertaining to inward supplies, if there is a liability because of the inward supplies that you have excess availed and not reversed during the timelines of the 30th November, then you pay through DRC 03. And while reconciling in table number 12, you will have an unreconciled amount that is between the books and between the 9C, whatever the ITC that you are claiming. So at table number 13, then for that particular unreconciled item, that you will say that this is the reason for the excess ITC availment and which is reversed through DRC 03. At table number 13, you will report it. And see, to my understanding, table number 9 is only pertaining to RCM and outward supply, that is percentage of liability that is to be reported. In inward, never they have asked that you report it percentage wise. So this is the thing.
Table 11 is the additional amount payable but which is not yet paid. So we saw table 6, 8 and 10 that any unreconciled amount we are reporting the reasons for the same. So if we have any amount which is required to be payable, we can report it over here and paid through DRC 03. So we can bifurcate it percentage wise, others, interest, late fee, penalty and paid through DRC 03. Then what we have is table 12, that is our reconciliation of net ITC. So in table 12A, we report the ITC availed as per our audited financials. So basically this contains the ITC which is of the current year. But in GSTR-9, we have the ITC which is of previous year claimed in current year, or current year ITC which will be claimed in subsequent years. So we need to make the adjustment of that in table 12B and 12C. So in table 12B, if you see, we have added back the ITC booked in earlier year which we have claimed in current year. And in table 12C, we have subtracted the ITC which is of current year which will be claimed in subsequent years. So we get 12D, that is our ITC availed as per the audited statements after making the necessary adjustments. We compare it with table 7G of GSTR-9. If you recall, it is our table 6O, that is ITC availed minus our reversals. So we get table 7J. And we have any unreconciled ITC and we report the reasons for the same in table 13.
So earlier at table number, we can say that 12F, we used to have a difference because at table 12A, we have the ITC as per the financial statement. Then we add back the ITC which is pertaining to previous period but claimed in current year. So what will happen is that in GSTR 3B, this particular ITC is getting added. But now with amended GSTR 9's requirement of introduction of table 6A, this particular requirement, see in my office it is a practice that earlier year ITC is never to be reported because of the press release that table 6 or table 6 of GSTR 9 should have the ITC only pertaining to current period. So whatever is the ITC pertaining to previous year, we used to show it as 6J, that is the difference column. So because of the difference column, here the difference comes at unreconciled item, and that is the reason for table number 13. But now with the introduction of 6A, this difference is not going to come, and that is why ideally in most of the cases the reason would be nil. But there can be many practical reasons wherein the ITC as per the financial statement will be different and what we are claiming is different. So that is why the reason need to be elaborately mentioned over here, and that is to be properly documented that these are the transaction level differences and that we can show it while facing the scrutiny. And another point is that a table number 12B should match ideally with the table number 13 of the previous year. And table number 12C, that is ITC of the current year, which you are claiming next year, should match with the table number 13 minus 12 of the current year. Same, table 12B should be 13 minus 12 of the previous year, and 12C should be 13 minus 12 of the current year. So this way it will come. And ideally difference would be 0, but there can be many practical reasons where the difference would come. So that is to be reported at table number 13. Yeah. Table number, there is a question from Prerna that does 12 matches with the 3B column of 4C. Ideally table 12 is divided into 12A, which is as per the books, and what the derived amount is 12D. So it is the as per books what you are claiming that will be the total ITC as per the books, and the ITC which is as per 7J, that is table number, so GSTR 3B, whatever you are claiming and reversing, that will be 7J ideally most of the cases, then it will match. But if there is a ITC which you are additionally identifying, or there is a possibility that there is a reversal, then 12D and 12E will not match. Say for example, there is a block credit, or there is a entry which you have claimed in 3B as per the 2B without checking whether it is appearing in whether it is accounted in books of account or not. So in those cases it will not match. So there will be difference, and you will need to reverse through DRC 03. There is a possibility that something is there in the books, but which is never come in 2B, and that is why you have never claimed in GSTR 9 or 3B, and this will lead to difference. So there can be the reason of either lapse or additional claim which will lead to difference, and which is to be reported at table 13. So ideally it will not match.
Well, we shall match with table 13 minus 12.
13 minus 12 of previous period.
And 12C shall match with
13 minus 12 of current period. There is a question from Manish that 12A and 12D look to be same. Any difference? There is a difference. That is why 12B and 12C come into picture. 12B is the ITC of the previous period, which is claimed in current year 3B, and 12C is the ITC of the current year, which you are claiming next year. Obviously, previous year and current year would have a difference. So that is why 12A and 12D will have a difference.
Moving further to table 14. So table 14 is basically the expense-wise reconciliation of ITC. So over here, we have table A to table O, wherein we have multiple expenses like purchases, freight, carriage, capital goods, various expenses in each row, which we can report it in table A to table O. Now, over here, we can also directly report in table P and Q in any other expense column if we don't want to report in A to O. Then we get table R, that is our total amount of eligible ITC availed, and table S is table 7J, that is ITC which we have claimed. So we get the reason for unreconciled ITC and report the same in table 15. Again, this entire table 14 is not a mandatory table. If we want to report, we can, otherwise it is an optional table. Table 16 is the tax payable on the unreconciled differences specified in 13 and 15, which we saw above. Then we have table 17, that is the late fees payable and paid. This is a new table. So over here, only the 9C late filing fees will be applicable. If the 9 and 9C are filed on the same day, suppose late but on the same day, then in table 17, there would be no late filing fees. But if 9C has been filed later than 9, then table 17 will be auto-populated based on the filing date.
Yes, I think it is optional and not mandatory, and it is self-explanatory, so we can proceed.
Now let us look into some various case studies which will clarify our concepts regarding 9. So the first case over here is that the ITCs of preceding financial year, that is 23-24, it is claimed and reclaimed in the current year, that is financial year 24-25, other than rule 37-37A. So we have ITC of preceding year, it is either claimed or reclaimed in 24-25. Then such ITC will be reported in table 6A. If you remember, then table 6A1 is the ITC of preceding financial year which is claimed or reclaimed current year other than rule 37-37A. So that will be reported in table 6A1. Now let us look at an example. So over here the ITC pertains to 23-24. It is claimed and reversed in 23-24 and subsequently it is reclaimed in 24-25. So one reason over here could be that the invoice is of March 24, but the goods are received in April 24. So in March 24, the invoice was booked, but since the goods were not received, we have reversed the ITC. Then again, we have claimed the same in April 24. So we will report that in 6A1 of 24-25. Example 2 we see is ITC pertains to 23-24, but it is claimed for the first time in 24-25. The reason can be that the invoice was not reported in Jan 24 and it is reported subsequently in May 24. So ITC is only claimed for the first time in May 24. Then again it will be reported in table 6A1. Now over here what will be the case if it is due to rule 37-37A? That is ITC of preceding year 23-24 reclaimed in current year due to rule 37-37A. Now such ITC will be reported in 6H because we know that in 6A1 we can only report when the reason is other than rule 37-37A. If the reason is due to rule 37-37A, we need to report in ITC reclaim table, that is our 6H. One example for the same is suppose ITC pertains to 23-24, claimed and reversed in the same year due to non-payment to vendor within 180 days. Now it is reclaimed when the payment is made in the next year, that is our current year, in our case 24-25. So that ITC will be reported in table 6H, that is our other ITC reclaimed. Moving further, this is another case. Now over here, the ITC is claimed, reversed and reclaimed in the same year, that is 24-25. So over here what we will do, now when the ITC is claimed for the first time, it will have been reported in table 6B, our all other regular ITC. Now when we will reverse the same, we will reverse under other reversals table 7H because it is due to other than rule 37-37A. Now when we will reclaim the same, we will report it under table 6H, that is our ITC reclaim table. So when we are claiming, we report it under 6B. During temporary reversal, we report in 7H, and during reclaim, we report in 6H.
So what is happening over here is that in the same year, we are claiming that particular ITC twice, and we are reporting once as a reversal. So effectively, it is claimed only once. But the reporting table is important, that it will show the reason for claiming it twice and reversing it once. Yeah.
Now let us look at an example for the same. Over here, Mr. A has claimed 100 IGST in the month of April 24 and has reversed the same in April 24 due to non-receipt of goods. Now the same has been reclaimed in May 24 since the goods have been received. So how will the reporting be? He has claimed 100 IGST in April 24, reversed the same in the same month because goods are not received. Again, he has reclaimed in May 24 because the goods are received on 4th May. Then how he will report in 9 of 24-25? Can anybody answer?
Credit 6 weeks.
First time claim, yes.
107H.
Yes,
And again 6H.
Yes. correct. So all the three tables which we are reporting 6B, 7H and 6H will be in the current financial year 24-25. Now similar case, but the reason is now due to rule 37 and 37A. That is ITC is claimed, reversed and reclaimed in 24-25. Now what we will do over here, when the ITC is claimed for the first time, we are reporting in 6B, same like previous slide. Now temporary reversal will be reported in 7A or 7A1. That is, if it is due to rule 37, it will be reported in table 7A. And if it is due to 37A, then it will be reported in 7A1. Again, the reclaim is similar like the previous one, table 6H. Let us look at an example for the same. So, Mr. A has claimed 100 IGST in April 24. He has reversed the same in October 24 due to non-payment within 180 days. That is our rule 37. Same is reclaimed again in March 25 as the payment is made on 4th March. Now, how will the reporting be in this case?
The answers? You just have to copy from the above and paste it below.
6B, 7A and 6H.
So 7A is for rule 37. Okay, and 7A1 is for 37A. Okay. So 37. So rule table 7A will be the correct.
Now, the other case is how to report if the ITC is of current year 24-25, claimed and reversed in current year, but it is reclaimed in the next year, that is 25-26. The reason is other than 37-37. So over here, when we will claim for the first time, we are reporting in 6B. Temporary reversal, again the same 7H. Now, in case of reclaim, now since it is a subsequent reversal, it is not the first time we are not claiming, we are claiming it for the second time. So we will not report in 8C. 8C has only first time claim. So, and table 13 has both first time claim plus the subsequent claim. So we will report in table 13, but we will not report in 8C. And again, since we are reclaiming it in the next year, we will report in table 6A1. Because from the next year's perspective, it is the ITC of preceding year. So in 6A1, we need to report in the next year. One example for this is, suppose Mr. A has received the supply of goods pertaining to Jan 25 in May 25. The ITC is claimed and reversed in Jan 25, but has been reclaimed in May 25. Now, what will be the reporting for the same? And 13 and 6A1. Same, we will not report in 8C because it is a subsequent reversal. We will report in 13 and reclaim will be reported in 6A1 of the next year 9 GSTR-9.
So the point over here is that there is a single transaction, but look at the implications. It is to be reported at 6B, 7H, 13 and 6A1 of the next year. So each and every transaction need to be tracked, that when you have claimed, where you have reversed, and when you are again claiming it. And the correct way of reporting it, where it should be reported. If there is a mismatch between the reporting that अरे रे ये तो गलती हो गया यहाँ से वजह वहां चला गया, but that गलती will impact the taxpayer. Okay, so that is why this is very much important that you understand each and every implications of the table and report it at a correct place. Yeah.
Now
Yes.
The compliance related doubt.
Yeah.
In the case of ITC availed and reversed on provisionally, as it
Okay.
it appeared on a 2B and we have.
We are following 130, 170 circular. Yes.
So if we don't, we reclaim the ITC, but we don't report in the reclaim 4D1.
Yeah.
What
Okay.
are the funding?
Report it in next period, I would advise, because otherwise what will happen that your temporary period ledger will always reflect that as there is a provisional ITC which is to be claimed. And another thing is that when you claim it in GSTR 3B in 4A5 but not reporting 4D1, then you will face a notice that you have excess claim than what is appearing in 2B. Yes, there is a chance. So you mentioned it that it is been rectified in the next period.
Now let us
Don't have any impact on 9, right?
If it is the same period, then it will not have impact, because ultimately 12 years ka 12 years ka 4D1 and 12 years ka 4A5 will have the combined impact.
Now in another case, again the ITC is of 24-25. It is claimed and reversed in 24-25, but it is reclaimed in 25-26. Now the reason over here is due to Rule 37-37A. Now how we will report in this case? So first time claim will be reported in 6B. Temporary reversal will be reported in 7A if due to Rule 37, and 7A1 if it is due to Rule 37A. Now reversal over here, or a reclaim over here will not be reported in 8C and 13. It will be reported in table 6H of GSTR-9 of 25-26. That is our next year GSTR-9. Now let us look at an example. So suppose A has claimed 100 IGST in month of April 24, reversed in October 24 due to non-payment, that is Rule 37. Same is reclaimed in June 25. Payment is made on 4th June 25. So how will the reporting be over here? 6B, 7A and 6H of next year. So your reclaim should not be reported in 8C and 13 of 24-25.
See, 13 will have only those items. See, 8C we are very sure that it is only the transaction wherein you are claiming for the first time. Okay. And in 13, except for 37 and 37A, everything whatever you are claiming next year will appear here at 13. Okay. But this is pertaining to 37 and 37A. 13 will not impact this. So 13 में भी इसको report नहीं कर.
Now one more case.
And one more practical advice would be that whenever you report in 7H, 6H, if there is a 6H1, 6H2 possibility, then bifurcate, segregate that in a financial year or the reason wise, so that it's easy to face the notices.
Now the next case over here is that the ITC is of 24-25, but it is claimed for the first time in 25-26. That is, we have not claimed it in the current year only. We are claiming it for the first time. Now over here, since the ITC is claimed for the first time, 8C will also be reported, and it will also be reported in table 13 of 24-25 since first time claiming. It is not the subsequent claim. Now in 25-26, we will report in 6A1, that is preceding year ka ITC claimed in current year from perspective of 25-26. So over here we have an example that A has purchased the goods in Jan 25, but supplier has not reported the invoice. That is, he has missed the invoice. So he has reported the invoice in April 25 and filed the same on 11th May 25. Now the recipient has claimed the ITC for the first time in April 25 when he has reported in 3B. So the ITC will be auto-populated in table 8A also for the first time. So over here, we will report in 8C and table 13 of 24-25 and 6A1 of 25-26.
So only 8C will have its impact, and in 13 it will also appear. Whatever, see, one thing is that 8C will always be shorter or lesser than table 13. Table 13 will always have a higher amount than 8C. Okay. So whatever is appearing in 8C will definitely come to 13. Just a practical cross check. Whenever you apply practically all this study while filing GSTR-9 and C, this can be cross checked for you.
Now there might be some confusion for 8C and 13. So let us clarify that. So what is table 8C? So table 8C is the first time claim of ITC, which is availed within the specified time period, that is up till 30th November. Now it should not include the ITC which is claimed, reversed and reclaimed till the specified period. Even if it is reclaimed up till 30th November, it will not come in 8C. So basically it contains the missed ITC which is claimed for the first time in the next financial year. If we take an example, so A has purchased the goods in Jan 25, but he has missed to claim the ITC in Jan 25. Now in May 25, he is claiming the ITC through his reporting in table 4A5 of 3B. So how he will report? Any answers?
8C.
Yes, next. Any other table?
13.
Okay, so 8C and 13 is the answer that it should appear in from before 25. Okay.
So since it is the first time claim, it will appear in both the tables. Example 2 over here is that Mr. A has claimed the ITC in March 25 and reversed the same because the goods are not reached to his factory. Now in April 25, he is reclaiming the ITC. So over here in which table will he report?
13.
Yeah.
Sorry.
Only in 13.
Yeah.
Only in 13 because it is already claimed once.
Since it is a reclaim, it will only be reported in 13 and not in 8C. Now let us see table 8H1, that is the IGST credit availed on the import of goods in the next financial year. So we will understand this with the help of an example. So in 24-25, the total IGST paid on import of goods is 100, which is available, out of which 80 is claimed in the current year 24-25 and remaining 20 will be claimed in the next year 25-26. So how we will report this? So in this case, in 8G, we will report the entire 100 rupees. That is our total IGST. Now I am claiming only 80 in the current year. So in table 6C, the 80 amount will be reflected, which will be auto-populated from our table 8H. And the remaining 20, which I am claiming in the next year, will be reported in table 8H1. So this difference should be nil in table 8I.
So this was the amendment that has came for the first time, that table 8H1 is required to be reported. So earlier there was always a confusion that how import on which the tax is paid in current year but not claimed in next year or current year, how it is to be reported. Is it going to be lapsed? So they have come up with this table H8H1 wherein you report that this particular ITC is being claimed in the next year at H1. Okay. What if something is missed? This is not part of GSTR-9. This is my question, that even it is not claimed by 30th November in the next year, import of goods, IGST, can it be claimed in next year or after that? Yes, it can be claimed because there is no restriction on import of goods to claim within 30th November because it is not claimed based on the invoice. It is claimed based on the bill of entry, tax payment challan. So there is no time limit of 16 for applicable to this particular. So there is possibility that you have paid 100, you have claimed 80 in the current year and you have not claimed 20 in the next year, but it will not restrict you to claim it subsequently also. Just for the reporting point of view, it will show over here that 20 is lapsed, but it is okay.
Moving further, let us see now how the late fees will be calculated in case the filing is made after the due date. So for GSTR-9, the late fees will be calculated for the period from the due date till the actual filing date. So our due date is 31st December. So the number of days will be calculated after 31st December. Similarly for 9C, over here it will be calculated from the due date or GSTR-9 filing date, whichever is later, till the actual filing date. Over here, whichever is later is because GSTR-9 already includes the late fees for GSTR-9C. There is no separate fees for that.
Basically, GSTR-9C is not a separate form. It is part of annual return only. It is just a reconciliation statement. So whenever annual return fees is applicable, it should be till the last dot, till the last filing, it should be calculated, and not only till the filing of 9. 9C is part of 9. So late fee should be calculated till the filing of 9C. And mind you that many officers try to catch you in this fashion that for 9 separate late fees and 9C separate late fees. No, if 9 is filed on time and 9C is late, then only for the 9C it is to be calculated. If 9 is filed late and 9C is further filed late, then only the differential amount is to be paid and not the entire 9C ka first to start. That is due date to the actual date of filing of 9C.
So over here, let us take an example. So suppose GSTR-9 is filed on 25th December 25. Due date is 31st December, so it is filed before the due date. But 9C is filed on 7th Jan 26. That is only 9C is filed late, but 9 is filed on time. So no late fees will be levied for GSTR-9. But for 9C, 7 days late filing fees will be applicable. That is from 31st December till 7th Jan. 7 days from 31st December. But in next case now, 9 is filed on 5th Jan 26 and 9C is filed on 7th Jan 26. That is both are filed late. So total fees is levied for 7 days, which will be auto-populated. But for 9, already we are paying late fees for the 5 days, that is till 5th Jan. So while filing 9C, we need to pay the late fees only for the balance 2 days and not for the entire 7 days. So all these fees will be auto-populated from the system when we go to file GSTR-9 or 9C.
Okay, so this is what we have tried to capture it through our PPT. There will be practical difficulties or practical questions that you may face when you actually file GSTR-9, 9C. Okay, there will be possibility that when you download table 8A in Excel and when you see the auto-populated figure in 8A in GSTR-9, there is a difference. So there can be multiple reasons that Excel is showing different than portal is showing, whatever appearing on the face is different. So the reasons can be that RCM entries are there in 8A Excel, but it will not have in 8A, in whatever online 8A, we can say auto-populated, because it is only the forward ITC that is to be calculated. If we bar the ITC pertaining to RCM and import of service definitely not going to come over there. But if we bar that RCM category, then also there is a difference. So the difference can be because of place of supply issue. That place of supply is shown at Karnataka, but we are sitting in Maharashtra and filing for Maharashtra. So only Maharashtra 8A will appear on the online and Excel will show obviously there. Same way, there is a possibility that the ITC of a particular supplier is been cancelled retrospectively. So it will not appear over online, but it is there in the Excel utility. There can also be possibility that there some amendments were made, that it is shifted from current period to next period. Invoice is shifted from 31st March to 1st April. Then definitely there is going to be difference over there. So this can be multiple reasons, but what the GSTN system or GSTN portal is claiming that whatever is appearing on face, that is user interface, that is the right one. That is the correct one. So you reconcile it in your way that where is the difference. Okay, this can be the reason. Will be the final value. That is what they are saying. There is also possibility that sometimes we have practically faced that GSTR-1 is also filed, GSTR-3B is also filed, but GSTR-9 is not getting generated. It might happen. System is saying you first file all 1, first file 3B, then only 9 will be appearing. And when we check that, the system has automatically cancelled that particular GSTR-1 or 3B and shown it as yet to be filed. But without filing the previous period, how could I file next year? So that is what our question was. And the system could got resolved and late fees were not charged, but we have to manual again file that particular return. So this type of challenges we may face in future as well, but we expect that we will have a smooth journey at least with this bifurcation of previous year, current year, next year, and all this differentiation. From 24-25 onwards, we might have less issues from the department, and what we want to say more, that is conveyed through GSTR-9 9C. And one more practical advice would be that if you face any differences while reconciling this, and you have a different method to calculate it, tabulate it, sign it, and upload it along with the GSTR-9C. That will be the best practice that I want to convey this way. I do not understand what is your GSTR-9 and 9C. At least it will save you in the future that wherever there is a possibility of notices under 74 that we have never disclosed this or that, these and that. So you can save it there that you are not facing 100% penalty on that. So this is, any questions from you? Yeah.
Last slide regarding late fees of 9 and 10. What is the source of information? Is it based on notification advisory?
It is through the change in this notification. GSTR-9 का form जो है, that is been amended. So that is the source. So there is a question, when do we report reclaim ITC in table 6B? Can you give an example, sir? In 6B, it is the current period's ITC for the very first time when you are claiming. It is not a reclaim ITC. Reclaim ITC will either be at 6H. Definitely it is going to be at 6H only, and it is not never going to be at 6B. Okay. How to reconcile 8A in Excel with the portal 8A? Okay, this is the, so there is a FAQ on the GSTN portal. If you see I will give you the date of the FAQ. FAQ date is 16th October 25. That is, we can say 1 month back. If you refer to that, there is a list of differences which can result to the difference between the Excel and the user interface. So that will help you to reconcile. I think regarding the PPTA, organizers will decide whether to circulate it or not. From our side, it is okay to circulate. There is one question from anonymous attendee that how is effect of reversal reflecting 7? How is effect of reversal reflecting table 7 getting affected in 8D? Can you please explain it with clarity? Say for example, see table number 8B will have impact only from the table number 6B. Earlier it used to be 6B plus 6H, that is reclaim as well. If you notice, it is only the claim that is being carried forwarded to 8B and not what I am reversing it. That is, say for example, I have claimed something that this is the ITC, that is I will reflect in 6B, and you are reversing it. Say for example, there is a reversal on account of credit note. That credit note, generally it is 6B, but say, let us take an example. It is there in, you have reversed it through 7H. Then this reversal of 7H is not netted off at 8B. So that is why it will lead to difference at 8D. So this can be one of the examples. Table 6H says H, amount of ITC reclaim other than 8 above under the provisions of that. Sorry, I could not get your question. Will there be balance as on March 25 in reclaim credit approved in GSTR-9? So as per books, yes, there will be balance. As per 3AB also there will be balance. I'm not exactly getting from which angle you are asking this particular question, that will there be balance as on March 25 in reclaim credit and appear in GSTR-9? If there is a balance to reclaim, then that might be because of the temporary reversal, and it will be there on the GSTN portal, temporary claim and reversal ka ledger. So as on 31st March, there is a possibility, but in GSTR-9, there is no particular column that there is this much is the balance that is to be reclaimed in next year. Yeah, that's it. I think all the questions have been answered. Will it match with table 9? Table 9 is the payment table. So where it is to be matched? I think we are getting confused between number of different participants and the questions from them. I think Rajbhai and organizers, this is from our side. Thank you everyone for patient listening.
Okay.
Thank you.
Thank you, sir, for giving such an interactive session on GST annual returns. So this is Sirtaj Sheikh on behalf of BCS Next Group Student Committee Leader Membership. So on behalf, I take this opportunity to gratitude all those who made today's event a successful. First of all, I extend our gratitude towards the CA Ashwin Chotalia sir for giving such an interactive session and giving the extensive knowledge of in his life of GSTR-9 how we attract with 9 and tackle the all problems and solutions. Then after I take the attitude to sincere thank to Riya Shah for taking such an interactive session and giving the such a memorable PPT to show how GSTR-9 actually worked. And also thanks Gokhale Sate Firm who organized such an event and giving this kind of opportunity to BCS to hold and conduct the GST session over here. And thank you all of participants who join online through and over here present. So this is all from BCS committee. And also if you want to the member of a BCS student committee, you can join our group BCS forum and also apply for a membership if you could get the chance to become a member of a student committee. And also there is a upcoming events. You can earlier get the notification of upcoming events of a BCS student committee. And there is a flagship event in Feb month, which is also called as a Tarang. Be aware of that. Okay, thank you guys for and giving the opportunity to speak, Raj sir. For time being, there is a such there is one question regarding the PPT of your guys. Just send a email or something over there. BCS will mail you the PPT, whatever present today. So you could easily access that PPT and get the knowledge of a 9 how it works. Also, if you want to become a member of a BCS, you can contact to BCS office and all this.